see it recording. Okay. Hey guys, I am with Helga James with BARR Group Mortgage right here in Gulf Shores, and we thought it would be a good idea if we would try to educate or just try to provide some value to anyone that may have questions about the mortgage rate, how the Fed rate cut affects the mortgage rate, and really just all this crisis that's going on. Maybe you will find this valuable. You've been doing this a long time, right? How long?
Over 20 years.
20 years. So she's definitely my go-to when it comes to a lender. You know, anytime I have questions, she's a big help, big value. She does a lot of loans for our team. So we're going to jump right into it, right?
All right, let's go.
All right. So hopefully you guys can hear us okay. We wanted to sit outside because it's a beautiful day. A little bit of background noise, but hopefully you guys can hear us. So how does the Fed rate cut affect long-term mortgages?
I think one of the best things that I saw was a meme that had an apple and an orange, and it said Fed rate on the apple, and on the orange it said the mortgage rate. They are apples and oranges. Mortgage rates are long-term rates, and the Fed rate is a short-term rate. So it is one of the big things that go into what creates our mortgage rates. I describe it as a cake. So let's say the Fed rate is the eggs. Well, you still have flour, sugar, baking powder, milk, all those things that you're mixing in together to make your cake. So yeah, we've changed that one ingredient a little bit, which is going to change the cake, but overall it is not the only thing that matters in that.
Okay, so that is very confusing to most people.
Right, absolutely.
So the Fed rate, what does that actually do? I mean, so you explain how it applies to the long-term mortgage rate. What is the Fed rate?
The Fed rate is, they call it an overnight rate or the short-term rate. It's like when a bank is lending money to another bank, or a short-term. It's a very short-term rate. So it affects your CDs and things more than it will affect your interest rates. Because it's the interest rate that Bank A is charging to Bank B when they're sending money back and forth to one another. That's how much they're making really quickly, and so that's how much they can pay in their CDs very safely. So a long-term interest rate, that's going to be bundled into a mortgage-backed security, that's going to be bundled, that's going to be sold to Fannie Mae, and that's meant to stay alive for 7 to 8 years on average. Even though it's a 30-year, 15-year loan, most of those last for 7 to 8 years at least.
Very interesting. So the mortgage rate, what is it tied to? If you could, what affects it most, I guess?
Typically, and this is a very untypical market, the things to watch is the 10-year Treasury bill. For years, you've almost been able to watch that 10-year Treasury bill go like that, and then right alongside the 30-year note is going to go like that. So they're ticking together. Right now, they're not. So it's very strange that the 10-year is going down, but the 30-year is not. So in a normal economy, that's something that you can watch daily to see what the rates are doing.
I see. So are there any supply and demand dynamics that go into a mortgage rate for the consumer?
Absolutely. Everybody remembers the bubble burst in 2008. And what happened then is you had bundles of mortgages that were sold, and bundles of mortgages are still being sold. That's a mortgage-backed security. So I make a loan, I sell that loan gets bundled in with hundreds and hundreds of other loans, and then that is sold. The servicing rights to that, as I said, mortgages are expected to last for 8 years or so. So the people buying those mortgage-backed securities are planning on making those interest rates over the next 8 years. So if everybody in the country refinanced at 2.5%, all of those bundles of mortgages would just implode. So our economy would just be in a disastrous mess. So the banks are doing the right thing. It may not seem fair that, the economic indicators would suggest that the interest rate be at, 3.15 or 2.875 when you're really seeing it almost near 4, but that's to protect us. I think one thing that may happen is we may see major differences in interest rates between refinances and purchases. And I'm starting to see that a little bit right now, where some of the places that I sell loans to are giving extra basis points, we call it. So you might be getting a quarter better interest rate if you're buying something than if you're refinancing something, which I think is smart.
And the whole idea is to offset the supply and demand.
The supply and the demand,
like
right?
That. Okay.
Right.
Interesting.
Right, and you're going to see underwriting turn times go down too. So at BARR Group, we're used to closing things well under 30 days. I mean, you know, Dusty, we get a great client that's responsive, that gets us our stuff, quickly. We can close a loan in 10, 15 days.
Quick.
That magical 10, 15 days on the perfect client is now going to be 30 days, I would say.
And is it because there's just more backlog?
It's because of that one day that the interest rates were so low that everybody locked in.
And you were flooded with applications.
Right.
Okay. And then you saw an uptick. Was that why?
Yes.
Okay.
Yeah, that was why. That's when the banks got scared that they were going to lose all their servicing rights.
Yeah. See, nobody understands that. That's good information. So why are some lenders' rates higher than others? I get that question a lot.
Yeah, and I get that question a lot too. And it's a great question. And it's one that I wish that people were more educated in. The analogy I use all the time is you can go to Walgreens and buy toothpaste, and you can go to CVS and buy toothpaste, and it might be a few cents difference. And that's the same with mortgage rates. You may go to me and you may go to my competition, and we may be, an eighth different or $100 different, but it's going to be about the same. We're all buying the toothpaste from Crest. So it's all coming from the same place. What you have to be leery of is discount points. So you can go online to bigbank.com. There's, who I'm talking about, the top 5 banks that you go to, and it'll have the interest rate published, but in the fine print, it'll say with discount points of XYZ. I normally do not charge a discount point or quote a discount point unless it's advantageous to the borrower.
Right.
It can cost you, do you really want to spend $2,000 to save $20 a month?
Right.
It depends on what your financial goals are.
Right. And understanding each client at a personal level is valuable too.
Very valuable.
As opposed to someone that you've never met before in another state. And another thing that I would say, if you're shopping local lender versus online lender, the local lenders also have an accountability in our community, and that's what I find. They're accountable to agents, so they're trying to maintain relationships. So, in my opinion, that holds them to a higher standard. If big online bank in North Dakota does a bad, loan, they're not worried about it. Where local like BARR Group, they have to be worried about it. So I think that's another.
I worry about it a lot.
Not that you guys do bad, have done bad loans.
You're only as good as your last closing, so every closing has to be perfect.
And if we were on that subject, when you're buying in a resort market, in the condo market especially, you've got to have, it helps to have a local lender that has done transactions in those buildings. And why? You can tell them why.
Oh, yeah. Condos, we've been doing condos in Gulf Shores for over 20 years. You talk to an online bank, you talk to an out-of-town bank, they're going to look up, the guidelines say you can put 10% down. That's absolutely true. That's what the guidelines say all day long. But there are about 30 pages of rules that you have to know intimately to know that condo will qualify with 10% down. It may or may not. We keep a database, a running Dropbox with all of the condos in it, with the budgets, the condo docs, minutes of the last meeting, when we got that information last, who the homeowners association is, so that we can reach out to the condos to get anything updated that we need to be sure that condo still qualifies with 10% down.
And that's so valuable because sometimes late in the process, lenders that haven't done transactions here will discover these things, and it can ruin a transaction or at minimum delay a transaction. Helga's had to come in and save many, right?
I would say probably 10% of my business every year is saving a loan, and that is a lot of stress, because you've got a contract date, you've already lost the time, and it costs the customer money. Many times I've got to get another appraisal, and so you've just lost $450 trying to use ABC Bank in XYZ County.
And we're mainly talking about loans that are sold in the secondary market. Obviously,
Yes.
there are in-house loans, right?
Yes.
That different set of rules.
Different set of rules.
Right.
Different set of rules. And those in-house loans don't have 30-year terms
That's right.
normally, and they're
higher
not
interest
fixed
rates. Yep.
Yeah.
Not fixed. That's right.
Right.
Okay. Good information. All right. So let's see here. So any advice to current homeowners that are, interested in maybe refinancing or just watching the interest rate closely during this virus situation?
Yeah. If your interest rate is in the high 4s or 5s, then yes, you need to refinance. You should have already refinanced. It's definitely a good time to do that. If you want to shorten your term, if you want to go from a 30-year to a 20 or a 15-year, depending on how long you've had that 30-year, then yes, it is also still a good time to refinance. If you want to pull some cash out to, redo a bathroom or build a beautiful porch like we're sitting on right now, then yes, it's still a good time to do a refinance. For home buyers, don't be wrapped up in the fact that last week the interest rates were so low and this week the interest rates are so high. The interest rates are not so high. The interest rates are still fabulous. They're great rates. And I understand that just missed feeling. But it was a matter of days that it was there. So interest rates are fabulous. They're still wonderful.
So people that have, homes under contract and such, I know you kind of talked about, maybe some delays in processing. But, any other, concern?